I've completed the $1 million portfolio for Q3 starting on Monday. I always like it when a quarter and a month end on the weekend, so we have time to readjust and double check everything. These are the final results. Let's look at the monthly period analysis for this. You see, actually we'll go over the equity curve first. So it has, this includes 55 trading systems for a $1 million portfolio. And the worst case drawdown for this is $62,000 and about 6%. And so when you take a look at this, we include strategies all the way back to 2007 that were only developed for 2013. Some are 2013 forward, some are 2015 forward, and before 2013 or before 2015, those don't work as well, but their equity curves are included completely all the way back to 2007, even if those equity curves were negative. And so trade analysis shows 44.87 average trade profit, 41 on the long side, 50 on the short side. So a little bit, half as many trades on the short side, a little more efficient as far as average trade profit. Annual period analysis. So let's take a look at the annual period analysis on this. So here it is, 233 in 2018, very volatile year. 2017 low volatility, 98,000. So far this year, 94,000. 193 in 2016. I mean, really good results. You're talking about a 10%, 9.4% on a million here, 9% in 2012 here, and so 23% here, 9.4% there. That's just trading one contract on all 55 strategies without adding anything to it, and be a very conservative approach really on a $1 million portfolio, since the drawdown is 62,000. That would only be 6%. And so here's where we are. Let's look at the monthly period analysis so we can see the latest. So May would have been down 9,000, June up 30,000, and you see January would have been up 39,000, November 31,000. So those are some of the big months. You see some of the big losing months, minus 22,000 in May of 2018. And there are other losing months as we scroll through here, as we take a look at all the losing months and all the winning months. You see, so you can compound contracts on a strategy on a portfolio like this and get a higher, potentially a higher percentage return if you're willing to risk a higher percentage drawdown beyond 6%. And so you have to like this setup. All but 7 of these are day trade, so 48 strategies are day trade. Let's look at each strategy alone, individually. And so I've included strategies, for example, that are only designed for the last few years maybe, and so their total net profit might be down. Cobra Euro 4 was a modification we made. Let's just start with this right here, then we'll go back to the top. We're going to look at all the signals, all 55 of them, in this mini webinar type video. Here is Cobra Euro currency, great equity curve. Only problem is, last few years it's only had a handful of trades, maybe about 12 or so. And the trade frequency really slowed down, and so I've made the modification to trade Cobra Euro 4, and it tests well back for the last few years, but the results for Cobra Euro 4 are only work well the last few years. And so it's a much different strategy. The market has changed. There's less volatility, and so if you could piece these together. You could change the code and say before this date trade Cobra Euro 2, and after this date trade Cobra Euro 4, and piece the equity curves together to make it look even better. But we've included the full equity curve in both of these, so you have the full transition. These all include $25 round turn slippage and commission, and so you see why would we include this is because the euro currency has changed, and Cobra Euro 4 captures it better from here. But just to be maximally pessimistic in our risk profile, we take a look at the strategies all the way back to 2007, every single strategy. So actually, let's see, gold here only goes back to 2014, so I'll have to double check why it only went back to 2014. But the rest of these, you see, they start. This is gold flash, and so we'll have to take a look at why it only goes back to 2014. So if you take a look, everything else goes back to 2007, If you scroll down in here, they all start at 2007. So let's take a look at all these individually from the very top. And remember, we include $25 round turn slippage and commission, so you get a lot of ugly equity curves. And for example, this is the SR counter trend 2, E-mini S&P. Here's the SR counter trend 2, E-mini NASDAQ. Here's SR counter trend 2, gold. It's made an equity peak. So it went through this sideways period. We talk about this, how you go through periods like this where for 2 years it doesn't do much. And this is the case, and it's had a nice, it's been in the zone lately. SR counter trend 2 gold has been in the zone. SR counter trend 2 gold, crude oil is bouncing back. Silver had a bounce back month, and so soybeans is kind of just going sideways. Now we go over and take a look at gold flash. We told you we've already talked about this strategy a little bit. Then we take a look at Cobra 3, meaning NASDAQ. It's one of the hottest strategies. We like it. We show the full test, even though it's done well in recent years because price levels are in sync with the right type of volatility for this type of strategy. So, and we went over Cobra Euro 2 and then Cobra Euro 4 and talked about how we've pieced those together but included both equity curves and a tick count trend, E-mini NASDAQ. We've seen how this has done well since this time frame. Going forward, the E-mini NASDAQ, the volatility is picking up, and at these levels we like trading trend strategies on the E-mini NASDAQ, counter trend strategies on the E-mini S&P. Here's tick count trend 2, E-mini S&P. You see how well this is done as it's pegged away at the equity peak. And the 5-minute version, same exact rules, does even better. So really like tick count trend 2 for the E-mini S&P. Mirror is a mean reversion strategy. Like this strategy, it's right here where it's been before on its drawdown. And so like anchoring in here on this one. Gold, SR counter trend 2 V2M. It's kind of gone sideways. SR counter trend 2 V2M on crude oil. We're going through the SR counter trend 2 V2s now for 8 strategies over the 1 minute, 5 minute, and 15-minute time frames. And so here's crude oil. It's working its way back up. Silver, E-mini S&P, all pretty nice strategies. Pretty nice equity curves. The frequency is low. There's the E-mini. Here's the E-mini NASDAQ. RBOB. It's making its way to equity peaks. Platinum, it's kind of hanging in there. And so we go over those same 8 markets for the 5-minute version, same rules. Sideways in gold, crude oil, moving back up to the highs on the equity curve. Silver's hanging in there, E-mini S&P, near equity peaks. Natural gas, 5-minute, SR counter trend 2 V2M has had a little bit of a pullback. E-mini NASDAQ, up near equity peaks. RBOB, at equity peaks. Platinum, just kind of hanging in there. Now we flip over to the 15-minute version, and gold is still hanging in there. Gold has just been a lethargic market with this type of pattern. And so crude oil at equity peaks, silver near equity peaks, E-mini S&P kind of pulled back a little bit. Natural gas just kind of sideways. E-mini NASDAQ close to or at equity peaks, and so I'm going to scroll down. We are right here on the E-mini NASDAQ, and so RBOB 15-minute moving back to equity peaks. Platinum just kind of hanging in there, and then we get to QS3. One of my favorite strategies, QS3, is quick start, and it's got a solid series of equity peaks that I really like. ES Night, and we talked about how this works since this time frame, but really goes back to 2009. Now this was the financial crisis, and so this is a long only strategy. You might anticipate that. We showed the worst case drawdown of the total portfolio of about 62,000. Well, this is 44,000 of that right there. So talking about a long only strategy. So let's take a look at Gap Fill Master. We modified one strategy from 7 trading systems for the S&P futures. This is Tick Pulse V12. It's the 1-minute version of our Tick Pulse strategy. Let's see, Bonds Pivot. Nice strategy in recent years. Bonds do well on those pivots. Soybeans just kind of sideways on soybean swing, as well as soybeans day trader 3. We like to keep it because like the potential possibilities of what we can do with soybeans. Um, this is 60-minute breakout. It's worked since this time frame. It did not work before this, but it's worked since about 2015 when the Fed started raising interest rates again. And so it's an overnight strategy, and it's in the zone from this time frame. Let's see, you're at 36,000 in here. And so it's almost doubled this low valley right here in value. And so that's a 60-minute. See, that's a 60-minute breakout. This is gap continuation 2019. So our gap continuation strategy did not work as well, and this strategy tends to work better the last couple of years since 2017. This strategy, adaptive moving average, kind of gone sideways, has had a pretty good week so far, and it's headed back up. Let's see. Active Trader 2019 update. This test well back to 1997. So we like this strategy. This is the tick pullback. And we notice this pattern. We developed it a few years back in here. And then it just continued to make new equity peaks. So this is adaptive moving average in Active Trader. Now this is tick pullback NQ. Works really well in the last few years. That was the E-mini NASDAQ, the first one. This is tick pullback E-mini S&P. And this is a swing strategy, swing day trade strategy. So this test well back to 2001 on the NQ. And here's gold. Asia Gold 4 long only. It's making equity peaks right now. Asia 4 E-mini S&P. This was truly unbelievable when I saw this. 2009, such a low drawdown, such a nice strategy to lock into. Gold, Asia Gold 4 back testing. This is a short only strategy. So while the long side has worked out well, the short side has not done as well. And so these are all the performance reports in the 200K portfolio. So the beauty is you can run this report, and you can look at all the individual strategies, but clicking on the series of trades. And so here's a total trade analysis once again. And let's see, that's pretty much it. Equity curve. And so that's the update for the $1 million portfolio for July the 1st. 55 strategies. You get to keep. You get the strategy that any new strategy that we release, or that's on the site that you don't have that you want when you get the $1 million portfolio. You can dial me up and I'll send that strategy. So it's an all-inclusive portfolio that includes every strategy that I have that I share. So lots of upgrades. 55 strategies to start with.